Good evening. Can you hear me now? Microphone, just checking, doing a sound check here. So can hear? Good, good, good. Right. Okay. So thank you, Chilla. Yeah. Do you know what? I was chatting away. Didn't realize I didn't have the microphone on. So we're due to start in about 5 minutes time officially, but always come on a little bit early, just have a chat first and to open it up. So we've indeed done that. Yes, good evening. Hi, Timmy. And good evening. Do say hi if you're logged in now. There's plenty of people logged in already. So, yeah, do say hi. This is the funny thing. I always want to start it or start the recording literally as we that would be preferable, but it doesn't work that way. The software just automatically starts recording. But of course, you've got to open it up and let people get in. And hi, Chiller. So anyway, we're getting there. Let's see where people are based here at the moment. So we do this most times. Where are you based in the world or in the UK? But we usually end up with quite a variety of locations where people are based. Just whilst we're shooting the breeze a little bit here, we can't officially start until for another about 4 minutes. I was saying earlier on, there's sometimes a bit of a delay from when I'll ask a question to when answers start coming through. So yeah, there we go. We're starting to see some answers go. Pontypool, you're in St. Petersburg at the moment, but hold on a second. But live in Miami Beach. I don't understand that because you've just said you're in Russia. Oh, I think you mean you're from Russia, St. Petersburg, but you're at the moment you're live in Miami. I'm not sure. Now I just realised that camera's too low. That's probably a bit better there. There we go. That'll do. You reside. Well, it's not a bad place to reside, is it? Now Croatia for JP there as well. So an eclectic mix, along with Pontypool. There's a lot more people, so by all means do type in. I know a lot of people just want. Oh, there we go. There's more coming in. Glasgow, from New York, but you stay. Oh, okay. I don't understand the Russia bit. Oh, you visit Russia, right? Okay. But from New York, right? Okay. Now, South London for Mem. Can I just ask a question? Can you all see each other's comments? Can you all see the full list or not? I don't know. See, it takes a while for when I ask something. Stuttgart. Oh, you can see each other's comments, right? Okay, good, 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 good. Hi, Stephen. Hi, Victor. Yep, you can. Yep, I'm seeing. You can all see. That's good. So we have got, yep, still a minute or so to go before I can get started. So long as you don't go full screen. I'm not doing anything. I don't see what you're seeing. I can see it actually at my side. Yeah. So anyway, yes, I see what you mean. Yeah. Okay. So yeah, not full screen. Yeah. So I see what you mean. Market looks like it's slowly bouncing back from the correction. Yeah, we're going to go straight into the stock market here, Chiller. And so once we get started, so for anyone who's just coming in, yep, we've got about 30 seconds or so before I can officially start. Plenty of us in here this evening. And we're going to be looking, as usual, at the stock markets. And other markets as well. So, and have a general market chat. We did one. Well, I'm going to get ahead of myself here, so I better not start going into it now, should I? Okay, we're just coming into 7 o'clock, so I think I can pretty. Oh, sorry, 6:30 in the UK. So I think I can officially get started now. Good evening and welcome to. I know, Timmy. Yeah, to the second already. The second um, live broadcast on YouTube of this year. What's going on? Normally, I do them about once every 8 months, and now someone reminded me. It was Michael actually reminded me, and we did one last month. And I do want to just say, if you didn't see last month's one, just come onto the YouTube channel and go to the live tab, and you'll see last month's. Last month's was on Thursday, the 20th of February. So we're literally doing this 1 month later, but a lot's been going on, and that was the real reason that I wanted to come back so quickly post last month's. Now, last month's one, if you weren't there, I would encourage you to watch the first 17 minutes. That's all you need to watch, because I presented a load of information in that first 17 minutes. And bearing in mind, this is where the stock market was when we did that session last month on the 20th. So do go and check it out. See everything that I was presenting to you. Because, of course, I had a lot of cautiousness towards, I say, of course, I had a lot of cautiousness towards the stock markets, and I was presenting all that to you. As it turns out, I wasn't short at that point, but literally the day after, I shorted with my traders in my community. So we shorted on that day there, close to the end of the day. But that's when I shorted the S&P. And uh, I have banked and with my traders, and we banked at 5,515, literally 10 S&P points off the low. That's just luck. That's just the way it goes sometimes. But we have only banked half. So we've still got the other half of our position. So if you don't know all the reasons why, do check out that last live broadcast, because I was going through all the stuff. I just didn't know that the following day we were going to have a big down day, and then it was all going to kick in line with some of the technical things that were going on, like the divergences that we had on the weekly charts at that stage, as well as price having come up into these long-standing trend lines or trend channels there as well. So literally we shorted the following day. Now, but what about now? That's fine. That's happened now. So what about, well, that's all very well, but it may say it was 3 weeks ago, but if you actually look at the date of it, Chiller, then it was the 28th of February, which was actually 4 weeks ago. Must have been, well, must still come under 3 weeks, because it was, you're right, it's 4 weeks ago today. It was the 28th of February. You'll look at it, you'll see the chart from when we did it. Okay, so that's what's happened. But the reason I wanted to do tonight's session was because a lot's happened in this last 4 weeks, obviously. So I'm not going to go over old ground per se. We really want to know, well, what next? Where to next? Well, what are the um, possibilities going forwards? And all I'm going to do, as always, is just give you my view, like I did a month ago. I was giving you all of that information, and I'm now going to give you some more information tonight. So I think, in light of what's happened over the last 4 weeks, as far as the stock markets are concerned, absolutely, we got very oversold down, not just at the lows from last week. We were getting oversold in the days before that, in fact. So the market was already getting oversold. We very quickly switched from quite euphoric investor behavior when I was doing that webinar, that last live broadcast, to very pessimistic behavior. Okay, so often when you get very, very oversold, you know, extremes, at least short-term extremes in pessimism, then the ingredients are building for a bounce. So if we come to the weekly chart and I switch out to the Nasdaq, perhaps I'm just letting that load. No, that's all right. So on the S&P, we can see we bounce and we're sitting on my weekly 50 moving average here at the moment. The Nasdaq, if I come over to the Nasdaq, it's same over there, and it would come still trading around this long-term trend line here as well. We're going to come back to those in just a moment. So yes, we needed some sort of bounce, and from my perspective at the moment, given everything that's going on and the uncertainty of what's going on in the US with regards to tariffs, government cutbacks, laying off federal workers, all of that sort of stuff. So they're trying to get their house in order internally and cut some of the excess costs. But of course, there's going to be a short-term price to be paid for that as well. So I'm not personally bullish right now. Now, you've got to bear in mind, I'm still holding half of that short. So do I have a bias? Well, yes, but I could have banked it all. So my view at the moment is I do not believe this is done. The S&P from the top to pretty much the bottom has merely done a 10% correction. 10% corrections are pretty common within bull markets, but a lot of the time, even within bull markets, we see larger corrections than just 10%. We might see 15%. That sort of thing is not uncommon. So at this very stage, I'm not a mega bear by any stretch, but I am bearish towards the stock markets whilst all of this uncertainty is there. The markets don't like uncertainty. Businesses are uncertain at the moment as well. So putting it all together, what with a Federal Reserve, as some of you might have noted last night, Powell and the Federal Reserve are on the sidelines. They're not going to be cutting rates anytime soon. I think the market was pricing in a cut for June, July time. That may still happen if they then start to see a deterioration in things like the jobs report, that sort of data. However, there is a slight problem there at the moment in that the whole tariff situation, if that is followed through with, could be inflationary. So, and if that's the case, then the Fed may not be able to cut rates. I did find it interesting last night, though, that Trump posted on his social media that he obviously wasn't happy last night with the Fed, because he said the Fed would be much better off cutting rates as US tariffs starts to transition and ease their way into the economy. Do the right thing. April 2nd is Liberation Day, blah, blah. So you've got a president of the United States who really wants the Fed to cut rates, but the Federal Reserve are independent. They're not politicized. They are independent from whoever the political party is in power, and that for good reason. So they are purely looking at the economy, and as it currently stands, they don't want to cut rates, and I think that's the right call. But it's not to say that they won't be cutting rates by the time we do get to the summer if there is a deterioration in some of that economic data. So we'll see. So overall, I'm bearish towards the markets. Now, looking at the S&P, for me, so I'm short, yes, still with half a position. I am going to be looking at this 5,800 zone as a retracement zone where I'll be looking to see if there's any sort of reactions coming into that sort of zone. And I'm saying zone because, of course, price can spike around that area. So that's the zone that I'm going to be looking at. So I'm not looking personally to reshort or add to the shorts right now. I'm quite happy to wait and see if we do get more of a retracement. And if I'm wrong and the stock market ends up going all the way up to new highs, fine, so be it. I'll get stopped out at break even up there on that second half of my position. And if I do take a new position, then I'll get stopped out on that. I'm just being open with you as far as my overall view is concerned. So if we were to just roll over from here, fine. I'd like to see a larger decline of approaching more likely 15% decline. And so let's go and have a little look out. So an ideal level for me, it would be this 5,200 zone, around that zone. So that's at the next key level for me if we do break down for price to work its way down to. So that would be an area which I'd certainly consider banking some more off my shorts. Like I've already said, if I'm wrong and this is it, and I'm well aware that the market has got quite extreme as far as sentiment is concerned, and that could be it. There's lots of people out there saying, that could be it. We've reached some extremes in sentiment. But sometimes, just so you know, if this is the beginning of a larger trend for a while to the downside, then extremes in pessimism, all they do is mark short-term bounces before the market then rolls back over. So, and that tends to be what happens when markets do have larger corrections. So I'm not super bearish, but I'll see how the data goes myself going forwards. But certainly at the moment, I don't think that we're out of the woods yet as far as the stock markets are concerned. If we do bounce further, I'll certainly be looking at adding to my shorts. If we roll over, fine, and it'll be somewhere down in that 5,200 zone that I'll start looking at it. Of course, we have to take the information as it comes at us. If we do roll over, obviously sentiment is always important down at that sort of level. Okay, so that's enough for me on the stock markets for now. Now, on the channel here, I put out a video, maybe it was last weekend, I think, as far on the euro dollar. So I do want to just spend a little bit of time on the euro dollar, the largest currency pair in the world. So let's just take trend lines off for now. I've just got a few moving averages on here. That's all I've got. One thing that I think that's really fascinating that's happened is twofold. Is you've got a US president and administration who actively would quite like to see a weaker dollar. So that's what they want. You've got an administration who want a weaker dollar. So on that side of the equation. Now, the only way they're going to get a weaker dollar is if interest rates start coming down. But of course, the market itself is always forward pricing. So if we start seeing data points which start coming out slightly weaker, if we do, then the market will start pricing in the Federal Reserve and how many rate cuts it's going to do, etc., etc. I'll come back to that question, and I think. Well, sorry, actually, I'll answer your question now. Do you believe because of the uncertainty, there's been a lot of choppy price action? What in the stock market? I'm assuming that's what you're referring to. Well, I don't know if it's really been that choppy. The stock market's, it was quite a relentless run to the downside, really, over the period of 4 weeks there. So, not sure on that one. I don't think it's choppy. It's just volatile, but not necessarily choppy. So, what I would call choppy is sideways. Nope, that's not sideways. So, but certainly because of uncertainty, it's affecting the markets. Yes. Right. We can come back to the stock markets. I just want to talk to you a little bit about the euro because this is the next thing that I'm looking at with my traders in the trading room, in my trading community. So I just want to give you a sort of a general heads up. I'm not going to go into specifics as to where exactly I'm going to be buying or whatever, or selling. I'll talk to you about that in a second, but I just want to talk to you a little bit about it. Okay, so as I was saying, you've got at the moment a US administration who would like a weaker dollar. As I've already shown, Trump was tweeting last night or putting on his social media last night that he would like Powell to cut rates. And in fact, there's a growing story that Trump may try, possibly, to sack Powell. Now, that's not normally within the powers of a president, but he may try and go to the Supreme Court and see if he can get away with it. So, and if he does, then he'll insert someone that he wants to be the Fed chair, who he can influence, and so and put pressure on to do what, you know, cut rates. So he'll just change some of the Fed officials. That's really quite amazing, really. But it's a story that came out of the Wall Street Journal by a serious reporter. Whether it does happen is another matter, but it's a story that came out over this past week. Anyway, so you've got that side of the equation. Then you've got the other side of the equation, which is Europe waking up. It's a bit like, has anyone read The Hobbit? It's a bit like the dragon in The Hobbit. Has been asleep on the gold in the in Mount Doom or whatever it's called for years and years and years, and then it finally wakes up. And so Germany is and the Eurozone, it's like they're waking up because of the conflict with Ukraine and Russia, and then realizing that, okay, yeah, they haven't spent enough on defense and all of that, and actually Trump's right on that, and previous presidents were as well, but the pressure has built to where they've realized, oh, we really need to do something. So as you know, just this week, Germany have had it approved through their parliament, this 500 billion euro pot lending facility for them to spend on defense, infrastructure, and green projects as well. The EU overall is allocating a 800 billion euro pot of money to massively increase on defense spending. So this is a wake up to the Eurozone overall. All of this money going on infrastructure projects, as well as obviously defense, and being allocated to defense manufacturers across Europe, could be really bullish over the long term for equities. And we've already seen, if we look at the German DAX, we've already seen the DAX doing pretty well this year relative to what the S&P is doing, which not doing quite so well this year. So we're already seeing relative outperformance in some of the stock indices, but this could still, in relative terms, still be in the infancy of a great turnaround across the Eurozone. Certainly for some of the older economies like Germany, which has actually been in recession for the last couple of years, all of this big spending could really ignite its economy. It's still a huge economy, but it's been, just doing nothing. And so this finally might reignite it and other economies across Europe. Some of the economies are doing fine anyway, but Germany hadn't been. So the way that I'm overall seeing this is certainly the potential. And this has only happened over the last, 3 weeks. It's all changed in the last 3 weeks. It's why the euro initially shot up when Merz, the new German chancellor, won the election and then said, right, this is what we're going to do. And so that's what turned everything around dramatically. So going forwards, we have got a situation where we've got a European economy, and some of the big old school economies within that, like Germany, but across EU-wide, lots of spending with defense manufacturers and the overspill from those manufacturers that filters out to other manufacturers and industrial plants, etc., etc. So you've got all of that. Plus, on the other side, you've got a US administration who would actually quite like a weaker dollar. So you look at the euro dollar and you think, right, okay, we've got some potential here. Right. So looking out, if I come out to the monthly chart, you can see I've got just some moving averages on here. Let me just get rid of that short-term 20 moving average there. So one thing I often look at is when you get multiple tests of a moving average. I'm not going to go into all of my analysis with you, but the green one on my chart is my 100 period moving average. And really over the last 15 years, its price has been either bouncing off of it from above or bouncing back into it here from below and just reacting and failing and failing and failing and failing, and again in 23 and again in 24. Now, I use an old concept that I devised years and years ago just through just noticing these things. And that concept is called pebble on a pond. So you imagine you're skimming a pond across, a pebble across the surface of a pond or a lake. And when it first bounces, hits the lake, it bounces, then bounces again, and then gradually it loses inertia over time. So it creates lots of bounces across the surface of the water, but at some point it's going to just plunge through. And I use that philosophy with trend lines, with horizontal support or resistance. If we start seeing lots of hits of that level, at some point it's going to break through. And that's what I'm looking at here overall with this big monthly, on the monthly chart here, the monthly 100. We've had so many tests there. So overall, and the way that the euro's come up now, if you'd have said to me just 6 weeks ago that the euro is going to have a massive up move, I wouldn't have believed you almost, because then there was nothing set up for that, so to speak. But everything changed after that German election, and then getting this approval, and with what's going on in the Ukraine and the US, with Trump pulling back militarily, doesn't want to get involved militarily, and saying, well, look, Europe, it's over to you to protect yourselves. We may even come out of NATO, who knows? So it's been a big wake up call to the Eurozone. And so therefore we've seen this massive shift in the currencies here. So the potential for a large follow throughs there. And so I'm stalking this with my traders at the moment. We're not in this at the moment, but we're stalking it. And I see the scope for the euro dollar to work its way to between this 115 to 120 zone. Now that can take a lot of time, obviously, because that's quite a decent distance for price to travel. But we'd be looking to get into a trade, build it, bank some profits, hold a core position, trade in and out of the whole run. So it's a major thematic trade is what I'm talking about there. So now, of course, anything can happen in the markets, and maybe we flip all the way back over on these tariff wars. If they escalate, then that's a threat to the euro going back over. But just remember that we've known about tariffs since earlier this year, and the euro and the pound as well rejected the very first announcement about tariffs. It rejected it again. Or every time it's looked like the euro was going to really roll over as the tariff talk escalated, they bounced back. So maybe we have to take that as a sign. So I spent the latter part of last year, from November, shorting the euro all the way down. And now it looks like I'm going to be on the long side. So I missed the breach up. Of course, it came quite swiftly. So I've just been tracking the euro and I'm in other positions. Obviously, I've already told you about the S&P, but I am in other positions as well with our traders. So I'm just tracking it. So and we're looking for an entry at some point. There's a lot of threats. Like I said, we're approaching uh, April 2nd, and which is when tariffs will go into effect. So we don't know exactly how the markets are going to react around that time, but the markets know it's coming. And so we'll have to see. But it's a fascinating time. And it's not just the euro. Of course, sterling, the pound against the dollar, is a very similar looking chart as well. And so is there upside scope there? Again, if you've got a US administration who would quite like to engineer a weaker dollar, then it won't just be the euro that goes up. The pound will do an equivalent sort of move as well. So that's how small small hoarding go. Yes, that's it. Oh, okay, right, oh, Timmy, right. Um, so yeah, so I just wanted to just paint the picture of what I'm up to, generally speaking. So coming back to that euro, that's generally what my view at the moment. Unless the euro rolls all the way back over again, I'm taking this as a rejection that happened in the earlier part of the year. And then with all the other stuff that I've already just mentioned, um, I'm looking for more upside in the likes of the euro and the pound, etc. So that's my general view. And that's why I put that video out last weekend. Um, the thematic trades are the ones that can make your year. That they're not just something that makes your week or your month. They can make your year as far as the potential profitability from them. So anyway, um, right. Trade 1984 is asking here. Uh, would you change your view and buy the S&P once you bank your short profit? Good question. So let's assume that, yeah, okay. So let's assume the S&P rolls over as you and comes down to, let's just go with this. Let's just say, yeah, it rolls over whatever time frame. Maybe we bounce first higher, and then eventually roll over, and we get down into this. Let's just say 5,200, and I've closed all out by then. So let's say I'm all out at that stage. Would I simply reverse? No, not necessarily. Just because I've closed out doesn't necessarily mean that I think that's it. We're definitely at the bottom. It might just be that I think that I'm content with the profit I've generated and it's a good enough level. So not necessarily. No, I wouldn't say necessarily. What will likely happen is, let's say that it does roll over. What will likely happen is that'll be it. I'm not going to be itching to get back into the S&P, um, because I'm trading other markets, as I've just said about the euro and some of the other currencies. So what will happen is my attention will be elsewhere, building those positions, because I get in and then I add and build positions. So no, I don't think so. Is the answer to that question. Yeah, JB is saying, coming back over to the euro, potential for short-term shorts. Well, yeah, absolutely, JB. Yeah, I think that if we come up to the weekly time frame, there was, as we came up into this whole zone up here around 109, yes, just because we come into a load of resistance into that area. But is there still the potential for short-term shorts? Yes, there is, because it's a little bit extended. It's had a very strong run to the upside. Likewise with the pound against the dollar as well. So absolutely, there's the scope for them to have a bit of relief. And I do think that with the April 2nd, it's Thursday today, so it's about a week and a half's time. The 2nd of April is the Wednesday. Yes, it's a week and a half from now. So we could see a dip in these currencies as we start getting closer to that, and the market might start to get fearful of the tariffs. So absolutely, we could see short term, still more of a short term pullback on these currencies. Yes, it's certainly feasible. Yeah, absolutely. I'm just saying that I'm not trying to trade everything. So I try to take once I've got a view on a market, do I want to be long it or do I want to be short? Then I'll just ignore potential short signals if I want to be long, and I'll only be looking for long side signals, so to speak, or levels, and I'll ignore the short side. So, but yeah, absolutely, I can see the potential because they've had a very good run, and they could easily still pull back some more yet. Yes. Uh, can you analyze Bitcoin demo? Yes. Coming over to Bitcoin, I think the main thing that I would say about Bitcoin is that Bitcoin is a risk asset. So what I mean by that is it behaves like a risk asset. So it largely will track the stock market. So if the stock market is falling, then it's more likely Bitcoin will be going down, unless it has a disconnect and the correlations disappear. But as it stands, more often than not, those correlations are such that if the stock market is falling, then Bitcoin will do. So my analysis of Bitcoin is, yeah, it could bounce further in the short term if the stock market, going back to the S&P here, if the stock market is going to bounce some more, then I would be expecting Bitcoin to. But as my overall analysis is for the stock market to roll over, and that's just my analysis. I may not be right, as all as like with any piece of analysis, of course, but if the stock market is indeed going to roll over, I would be expecting Bitcoin to as well. Now, having said that, I am an owner of Bitcoin, like many of you, and I think Bitcoin came down into a decent level on the weekly chart here. A few over the last few weeks, really. If I put my old trend channels on, got this prior trend channel from 2021. We've just come down to the midline of that old channel, which has been nicely respected. So, so I think it's an overall not a bad area, but and I own it. So yes, I have a vested interest in it going up, but I don't really care if it like either. If it comes back down to 60,000, doesn't really bother me in the near term what it does. So because of my stock market analysis, I would actually quite like to see Bitcoin come lower. There you go. Uh, JB, coming back to you on the euro. Yes, of course, you were thinking from a day trading view. Oh, of course, from a day trading view, you can do whatever you like. Even short term swing trades, I could still see the scope for Bitcoin to come down. Sorry, euro to come down. I can see the scope for it in the short term. So of course, yeah, that sort of thing can happen. I'm surprised no one's asked us yet. I'm surprised no one's asked me about Tesla as yet. I was expecting a Tesla question or two. But you see, I have Ada on my list. Do I? Oh, yeah. Let's go and have a look. Now, I haven't looked at Adam. I haven't looked at Ada in months and months and months. The only reason I have Cardano on my list is one of my very best friends owns it. And that's the only reason. So this is the first time I've looked at Cardano in ages. It's just because my friend in Ireland, he owns it and he bought it a couple of years or so ago. He's not a trader. And so anyway, that's the only reason. So yeah. Ripple, I'm again, look, I'm not a cryptocurrency expert. So I'm not a yeah, I'm not a crypto expert on all of these. So if you ask me to look at any cryptocurrencies, then I don't really know anything other than on many of them, other than the technicals and just having a look at the technical charts. So for me, I have zero interest in Ripple. I understand some of the arguments for why Ripple may have really strong longevity, but I'm not an expert in it, so I'm not really going to pass too much comment on it. So the only thing I can say at the moment is it's a right mess. So um, but it obviously had that fantastic run up in November. If we come out to the weekly, can I? No, let's keep it on the weekly chart here. Yeah, it's got very choppy, as I've just said, but it's technically still in an okay position at the moment, even though it has got choppy. It's still technically in an okay position, but I can't really offer much more than that because I don't know enough about all the fundamentals behind it. So I'm going to pass on that. Oh, okay, yeah, yeah, yeah. Now I might as well come to where is it? Microsoft. Yeah, you can look at my watch list, but you got to bear in mind a lot of stuff that's on my watch list. It's just when people ask me about various things, and then I'll just go and put it on. So, and then then they just sit on my watch list. There's natural gas on there. I haven't looked at natural gas in ages, but someone would have asked me at some point. So, I wouldn't read too much into my watch list. The majority of my watch list is the major currencies up at the top, bonds, gold, silver, and the major stock indices. Of course, there are a few others within there as well, German bonds and whatnot. But all of that, what you can see up here, is the stuff that I'm going to most of the time. Now, I've brought up Tesla because Tesla's obviously, for obvious reasons, getting a lot of attention at the moment. And in fact, I think it was in the FT today, one of the big investigative journalists in the FT um, has found, has discovered some, or raised some question marks, if you will, about some of the accounting practices over there at Tesla. And this very same journalist found question marks over another large company just a few years ago, and that company ended up being found out for fraud and went bankrupt and all of that sort of stuff. Not saying that's going to be the case with Tesla, but certainly there are some question marks there over some of its practices, such as Tesla supposedly has 36 billion in cash, but it still ended up borrowing six billion last year. Now, I don't know anything more about all of that story, but that was in the FT. I'm pretty sure it was today. And so some question marks are, why are you having to borrow if, like you say, you've got 37 billion in cash? So it just raises question marks. There may be more, logical explanations for it, which I'm sure they will have explanations for, but some of those things need to be looked into. Right. So I thought I'd bring up that one. Right. Okay. I'm trying to catch up. What do you think about Tesla? Yes, Timmy. So I've just seen your question. I don't know when that was written. uh, Open, high, low, and close. High. Yeah, all's good. Bitcoin to 71K. Fill the on the CME gap and hit the year VWAP. Okay. Bitcoin again. Obviously, I don't know if I think I took off Bitcoin futures. I did have it, but I think I've taken it off because I just keep just a standard chart of it up. But yeah, fair enough. I would quite like, just looking at it technically on my chart, if I put the trend lines back on, I would quite like to see Bitcoin come back and re-challenge this old lower trend line. So yeah, I'd quite like to see it down there. And where is that? Somewhere between sort of 65,000 or so. Yeah. So yeah, would quite like that. But I'm not active in it. Like I said, I own it long term, but I'm not an active trader um, in Bitcoin now. Okay, you got in November with the Trump news. Yeah. What Bitcoin is that, Adam? Sorry, I'm trying to keep up with the questions here. Don't judge a man by his watch list. Yeah, exactly. That's why I thought I'd better mention that, because people start looking at my watch list. Oh, why have you got, the footsie on there? Do you trade the footsie? No, I don't. It's just that we go and look at it. So, oh, you got in Ripple maybe in November. Right. Sorry. Right. Okay. Yeah. Yeah. Anyway. Uh, Donald Trump and cryptos. Trump coin. Right. When it comes to gold, non-commercials are okay. Let's go over to the chart of gold first of all. Non-commercials are exiting long positions, but gold continues to rise, which would likely be a bullish sign since it's not overcrowded. Yeah. I mean, gold hasn't been overcrowded, JP, anyway, in the main, because the real reason for gold's rise has been central bank buying. That's where the real demand, heavyweight demand, has been coming from. So, of course, there are plenty of traders and funds that are, of course, trading it in the futures market, in spot, wherever. Um, but um, but yeah, it's funny actually. Even when you're looking at ETFs, yeah, of course, there's always going to be volume for gold, but yeah, the real drivers of the gold price has been central bank buying, really. So, but I can go and have a look at the non-commercials. So let's go and have a look. Gold. Uh, do, do, do. Let's have a look here. Yeah, we can see in the recent weeks that so this is the large speculators, hedge funds and the likes, have been exiting longs. They're still overall net long, and let's actually take this out to max data here. Then there's still there's break even there. They're still quite largely long overall towards gold, but absolutely they are exiting to an extent from certainly from their highs of earlier this year. More often than not, the hedge funds may well be right. More often than not, it's not that they're necessarily driving the gold price, but they're pretty good at looking at all the fundamentals as well. So the fact that we're actually diverging here, whereas gold's been making new highs, um, as far as hedge funds positioning is concerned, they've made a lower high and are exiting out of their positions. So there's a bit of a divergence as far as the futures market is concerned, as the large speculators is concerned, relative. Oh, get rid of the adverts, free sites. Relative to what gold's doing. So I think that's quite interesting. So thank you for raising that, JP. How do you think the tariffs and trade wars will affect the markets, or have they already been affecting them? Pound seems strong so far this year. Uh, I think the volatility that's coming on the back of tariffs is what's been driving the stock market down, because of the uncertainty around the tariff situation. And how do I think it will continue to affect the markets? Well, I can tell you that that's why one of the main reasons that I'm bearish the stock market right now, because um, the uncertainty around the impact of tariffs. And don't get me wrong, I know that the capacity is for Trump to do deals with other nations, and so some of the tariffs won't be as heavy as they might be and might have otherwise be. So that these are the unknowns at the moment. If whether there's negotiations going on behind the scenes, if we look at Canada as example, as we know, they've been trying to negotiate behind the scenes, but it does still look like tariffs are coming for Canada, um, among so many others. So if you're asking me, yes, tariffs have already been affecting them, but there's an ongoing impact as well, which is still the unknown. Jerome Powell was saying in the Federal Reserve conference last night, just that. There's a lot of variables, and it's the unknown at the moment, so it's making their job quite difficult. So yeah, I'm bearish to stock markets because there's a lot of uncertainty. It produces a lot of uncertainty for consumers, but also for businesses as well, until it settles down. So, which will probably take longer than just 2 weeks. This is something that's going to take months. So yeah, I for the time being, that's why I'm bearish the stock markets. I'll come to that. Chiller, sorry, I think you did ask about that now, and I missed it in the comments. So let's have a quick look at MU. Oh, Micron Technology, right? Okay, let's just stick that one in. Looking at a chart here, I don't know enough about the business, Chiller, so I really don't want to say too much. It's as you know full well, that's a very choppy market there, really, since August of last year. So it's fairly obvious. Obviously, it's in a sideways range. So until it breaks out of the range, but it's had so many attacks at both the lows here, and at the highs. Take your pick at which way it's going to break. So it's quite a nice pattern, but we need to see it confirm and break to the upside or to the downside. The problem with this sort of pattern as it builds is you can get false breaks. So it could break out and then come back in, and likewise break to the downside and then come back up. But yeah, just bracket that range off. Oh, okay. I'm just looking at the big picture, so I don't know anything about the next 7 days, right? So sorry, I can't really help you on that one. Right, let's get rid of that before that one ends up getting added to my watch list. So let's get rid of that down there. Okay. Secretary Besson has talked about maintaining a strong dollar policy. Yeah, it's interesting. Well, in some comments he has, and others he hasn't. Al, and so it's interesting actually that I have seen him comment on a strong dollar policy, because a strong dollar overall is good for global trade in a way. But then you've got his boss saying no, he wants a weaker, and others saying they want a weaker dollar. So, but it's a valid point that you've said there. The problem that Besant has got is that he's not the boss, and that Trump wants people who are going to do his bidding. So I would be more inclined to listen to the boss there, because Trump will do what he wants to do. And if someone in his staff goes against him, they'll end up getting fired. Just saying. So, yeah. But the caveat to a stronger dollar, though, is if we come back over to the euro here, or cable, is that, yeah, tariffs could be inflationary and actually produce a stronger dollar. So that is the counter argument to the euro, you know, potentially going higher, but certainly in the short term that we could see a stronger dollar, if that produces more inflation in the US, then interest rates stay higher. The Federal Reserve can't cut rates. That's the counter argument. So you have to take your stand. And so what I'm looking at, and I'll be brutally honest with you, I think that the amount of volatility that is going on as far as policy is concerned, that the dollar could in fact lose its shine. So the counter argument to that is that you've got nation states or economies. Let's take the Eurozone being a huge economy that owns huge amounts of US assets, US treasuries, stocks, you name it, and others as well. China's a great example of that. Um, with tariff wars raging, there's nothing to say that they couldn't use stealth tactics as countermeasures to the US and say, well, maybe we won't hold all this cash that we've got in US treasuries or in US stocks. And so therefore we end up with a slight loss of faith in the dollar itself. So that's one of the points that I'm looking at as well. So does the dollar lose a little bit of trust as other economies which trade with the US lose a little bit of trust in the policy and the way that maybe that they're dealt with, and they start to say, well, actually maybe we won't hold all these assets in dollars. So something to think about. That's something that would take a long time, but it's something to consider for the future. Yeah. Uh, pound yen, daily and 4 hour. Francis, hi Francis. Pound yen, yep, of course. Pound yen. Well, I'll tell you what, I'm going to go to a weekly chart just to give it some perspective here, first of all. Okay, so on the weekly, it's a bit stuck within all this prior price action here. So at the moment on the weekly, I'll come down to the daily and the 4 hour in a moment. There's not a lot to say. However, it's reacting so far off of my weekly 50. That's the only thing I could say there on the weekly chart. So let's move back to the daily and then the 4 hour chart, because I appreciate you may not be looking at those. But it doesn't make it an easy one for me because of all of this chop that it's trading within. So you've got the highs of the range here, and we'll take this as the lows of the range, and it's just trading sort of mid-range. So I don't have much of a view on a chart like that. It's just trading within a range. Who was asking this? Francis. Now, a 4 hour chart, you won't really care about all that range. So let's go and have a look. On the 4 hour, I would give that, I would be mildly bullish towards that on the 4 hour chart, because it's done a pullback into all of this prior highs just on the 4 hour chart. So yeah, I'd be mildly bullish on that for the upside. The problem is I have no view on the daily because of all the chop. But on the 4 hour chart, if you didn't show me any other charts and this was the only chart that I had, I would say up. Yeah. Okay, I keep putting this back onto the S&P, don't I? Yeah. Yen pair is an interesting one. Hasn't the Japanese central bank been pursuing a policy that's been devaluing their currency? Well, historically, yes, but change is afoot. Inflation is creeping back in, and they're encouraging companies to raise wages in they have like annual wage negotiations, and they actively encouraging companies to, they want to stimulate inflation, and so that's what they've been doing. So it's not quite the same as historically. So the potential there is for a massive change in the end. Um, we'll see. Um, you're seeing, Al, you're seeing a lot of news sentiment about the dollar losing its safe haven status, maybe frothy sentiment. Oh, okay. I've just been talking about that. I haven't seen all of that, whatever that news is. Al Yi. So that's interesting. So I haven't seen all of that, but yeah, it's. I think when if you have a government like in the US where it's difficult to understand with its trading partners where they're going to be, then you lose trust, and so the scope for the dollar to lose some of its safe haven status is there. It's not going to lose it in its entirety. It's still part of the global payment system and um, the main currency within that, but it could lose some of it and take some of the shine off of it. Whereas, and as I've already said, you've already got the BRICS nations been trying to trade outside the dollar, and certainly you might have other nations um, like I've said, the eurozone, like China, who want to remove some assets from the US, possibly if the relationships deteriorate. We don't know any of that for certain at the moment, but they're all stories, and that's the great thing with having Trump as a president. Whether you like him or you don't like him, as a trader, it's certainly making the markets interesting. And that's why I came back today, only 4 weeks from the last one. Now, for anyone who's here tonight, who missed last one, go onto my YouTube channel here, go into the live um, tab, and the last one was on the 28th of February. Just watch the first 17 minutes of it at some point, because I gave all of my analysis on the stock market at that point, and it was the day later in my trading room that we shorted. So it was just ironic, really, that the timing of things. Right. The EU just announced that they will delay retaliatory tariffs. That's right. Yeah, earlier today they did that. Yes. So I think until about mid April. Yes. Right. Okay. I think we're getting there. How long have we been going? About an hour. All right. Any other questions here? So what we've done is we've started off as usual with a bit of my analysis on the stock markets and on essentially the dollar, but I've looked at the euro dollar and the pound dollar. But if there's any other questions, then happy to have a chat with you. But I'm being very honest, so to speak, or should I say, it's not even about being honest. It's about being forthright that and this is my view, but I am still bearish towards the stock markets at this stage. So now things can change. Maybe the tariff wars calm down, negotiations are done, and in 3 weeks' time, it doesn't look quite so threatening. But as it stands, my view is that this is not going to be good for the stock markets, and so I'm going to hold on to the other half of that short. Is it possible to be a consistently profitable trader as a retail trader? Yes, it is, Manifest. One advantage that a retail trader has is that retail traders can jump in and out of the markets, which big funds can't. And so individual traders have a genuine advantage in that regard. You can just click a button and you don't have to worry about moving the market, not getting your feel, none of that. So that's not an issue for you. So yeah. Thanks, Stephen. Thanks, Timmy. Would you rather trade one strategy on multiple markets or multiple strategies on one market? Oh, that's a great question. Mia, I haven't forgotten. I've just seen your £4 dollar question there. So I'm going to come to your pound dollar question in a second. JP, I think this is down to the individual. Personally, I use multiple strategies on like one or two markets in relative terms. I do trade other markets. In fact, I'm in positions currently in three different markets, but in the main, the bigger trades that I get into are usually all focused on one or two markets. So that's how I prefer to do it. But that's personal preference. You might have I've got trader friends who trade the opposite way. They have a larger watch list and they've only got like two strategies, but they're scanning a big watch list of just any. I would rather know the market that I trade rather than it just being, oh, right, I've got a signal on pound yen as an example there, and I'm going to trade the signal. That doesn't sit well with me. I'd rather understand the market and be trading it regularly to understand all its little nuances. So, but again, that's personal choice. So, uh, now let me come to who was asking pound dollar 4 hour chart. Okay, pound dollar 4 hour chart. Right, Mia, pound dollar 4 hour chart. It is interesting at the moment in that on the 4 hour time frame, it's making highs, pulling back, making new highs like here and here, pulling back some more, new highs. Every time it just about makes a new high, then it pulls back, and the same here as well. So I often call this marginal new highs, which is like a rounded top pattern in technical analysis. So what it's often showing is just a deterioration in upside momentum. Okay, but that's only on that time frame. But having said that, the pound is not overly pulling back. It is over the last 2 or 3 days just sort of going sideways. So I'm still seeing this as overall consolidatory. So yes, I can see some downside risks there on the 4 hour chart, but I never trade a single market without looking at other time frames. So when I come out to the daily, yes, I can see the scope for it to pull back, but overall, given the trend that started to develop, I'm bullish towards the pound. So yeah, on the very short term, it could pull back. And where would I be looking towards? 128.50 is not, a bad area here towards 128.50 if it does pull back. So if it carries on chopping around here, then it's going to form a sideways range. And there's a bit of a flag going on at the moment. So it could be a bit of a bull flag, bull pennant, whatever. Whatever way I slice it, as it stands, I'm bullish towards the pound dollar. So it doesn't mean to say it can't pull back a bit, but I'm just monitoring it at the moment, much like the euro, and bullish overall. But 4 hour chart, yeah, I can see it coming off a little bit, but I'm bullish overall. So for me, I'm more interested in ignoring the downside and just wait for when it gives a buy side signal. Now that could come from a pullback into technical support, as I've just said, about 108.50 to 128.50 to 128, that sort of area. Or if it just chops sideways, then I'd be looking for a breakout. So Manifest. Sometimes it's hard to think it's possible in the fog of it. Yes, I understand. I always say when I do my YouTube videos, when I'm doing a mindset one, I'll actually take a screenshot of your question there. Maybe I'll do a video on that subject, because I always say this is like the market is testing you. And it doesn't matter if you're 3 years in or 8 years in or 15 years in, the market doesn't stop testing you. You just have to get better at dealing with the market testing you. So I think that it's the naivety of a lot of traders is that they think that all they've got to do is technically get better. And that's just not true. Um, there's a saying that a lot of traders keep searching for a technical solution to what is a psychological problem. So I will do a video on that very subject for you, because it's very common. And don't think, oh well, I'm 3 years in, I should be so much better or whatever. I've met traders who have been 15 years into their trading and never got on top of the mindset side of things. So because more often than not, if you get on top of the mindset side of things, then you don't really worry about when you're going for a drawdown period, or your your equities going sideways, or all of those sorts of things. They become less important. And the irony is, when they become less important, you end up trading better, or your results are better. So let me just take a screenshot of that there before I go and forget. Uh, uh, okay, right. Sorry about that. Thought I might as well just take a screenshot whilst we're here. What instrument do you trade? Futures, forex, options? Who's asking that? Zoom back up, or chiller. Forex. When I'm trading forex, and when I'm trading stock indices, usually CFDs. Sometimes it might be on a futures contract, but yeah, CFDs or forex largely. Yeah, I used to trade options years ago, but I don't anymore. Obviously, huge variance. What would you? Yeah, there is a huge variance. A realistic timeline, I would put between sort of 4 to 6 years, and I'm not joking, because I think 4 years, 4 to 6 years, you need that time to have gone through and traded through different sort of market conditions. It's not that you can't be profitable before that, but that's not what I'm talking about. Um, but to build up enough experience, you need to be in the market for a minimum of 4 years just to start building some experience, having had winning periods, losing periods, all of that comes as part of building experience. So yeah, when someone comes and says, "Oh, I'm 1 year in and I've done really well," I'm great, but you're not an experienced trader at 1 year in. So yeah, I'd say sort of 4 to 6 years is a sweet spot, really. Adam, psychology is definitely the hardest hurdle, as you're saying there. Just checking the times here. Actually, the stock market's closing in 20 minutes, don't they? In trading, for you, it's sticking to a strategy. Or you're getting much better at stopping yourself from taking trades rather than real trades. Bets rather than real trades based on a strategy. Yep, good, excellent. Trump will be live signing an executive order in 25 minutes. Oh no! Oh, there's gonna be some movements going on then. Great video on impatience recently. Did I? Right. I do usually try and do 2 videos a week, and so Oh, it was a comment that you'd made, Adam. Right. Okay. Thank you. Appreciate that. That's great. Excellent. Yeah. I mean, if someone comments on a video, if I think, oh yeah, I could do a video on that, then I will do it. Sometimes I just forget. Sometimes people ask, and I forget because I've got other things in my mind and I've forgotten. But yeah, impatience in trading. Yeah. What would be the best suggestion to master the mindset? Um, Join my trading community. Why don't you just join? I've got my own. I've got a trading room. You've got all of my materials in there. Just join. It's only a subscription. Just join. But if you want to read a book on trader mindset, then probably The Disciplined Trader by Mark Douglas is not a bad one to read. Well, it's a good one to read. Sorry. So yeah. There's many books, but that's a good one. Or any of I'm trying to think of his name now. There's a UK trader psychologist as well, Steve, and I've forgotten his name. I've heard that his books are good as well. But I spend a lot of time on trader psychology. I've been trading 28 years. Is the trader mindset? I always say this, although I have trading strategies, if I didn't have the mindset, I wouldn't have made the money that I've made over the years from trading without that mindset. So I'm a big, massive proponent of it. We talk about it a lot in the trading room. How do you deal with profitable trades you never took? Oh, good question. You had no idea and it went in your direction, but you never took a trade because of outside circumstances. For example, you were busy. Um, yeah, again, I could do a whole video on that, Varys. But I think you have to let go, because if you don't let go, it will wind you up and then you get frustrated. And if you get frustrated, then you carry that frustration as baggage into future trades. So you have to just use self talk and say things like, well, that trade never belonged to me. You know, so yes, I was busy in my personal life and I missed it. For whatever reason, that trade never belonged to me. There'll be another one in the future that does. So I think if you use that sort of self language, it helps because we always want to as I always say, you want to have a very, um, as much as possible, a very shallow emotional range. The bigger your emotional range, then that's going to affect you, like I've just said. So if you can use self-talk in a situation like that and say, well, at least my analysis was right, and actually give yourself a pat on the back and say, well, yeah, look, it went. Yes, I know my analysis was there, but I got busy with life and I've missed it. So rather than allow yourself to get frustrated, angry, all of those emotions, which are then just going to affect your future trades, actually say, well, at least my analysis was right. And for whatever reason, maybe that trade just didn't belong to me on that particular occasion. And all of a sudden, you're calm. And that's what we want, calmness. The more that we can maintain calmness, no matter what's going on, the better we're likely to be. Yes, I just put them in a spreadsheet chiller. Yeah. I just log them. Sometimes I put some notes in. You've got to bear in mind, Chiller, I've been trading 28 years. So I log them just as a form of process, but I know, I know what I'm doing, so to speak, in that. Um, I don't need the spreadsheet to tell me whether I did the right thing or not. The thing that I practice every day is stick to the stick to the plan. Trade the plan. So, so I just log them out of habit, but I don't use it as a resource to learn from in the same way anymore because I know whether I'm sticking to my plan or not. So, yeah. Is it better to backtest on one time interval and stick to it, or to also, interesting, include analysis of multiple time frames and then decide at your discretion what to do next. I think that it would be good to backtest on several time frames. However, it's not always feasible. So take a base time frame, whatever it is, 4 hour time frame or a daily chart, whatever it might be, and that gives you your template. So that tells you whether your strategy is profitable or not. Yeah. What the edge is on the strategy and what the tolerance is as well. Some people backtest strategies and it's got such a tight tolerance that one pip one way or another can massively affect the strategy. But if you've got a strategy that you've back tested that's it's got a reasonable results, then you can use that then as a template to either trade it blinkered and mechanically, or to say, look, this strategy is robust, but I'm still not going to take it on every single occasion, and I'll have poetic license as to whether I want to take it into a given level or not, or whatever. So that's what I would say. Psychology kills you. I can follow my rules and plan 2 to 4 weeks with discipline, but after I don't know what's happening, start over trading when I close past challenges or payouts. Yeah, I mean, that's a Mikhail, that's a very common thing that happens. So that people will maintain discipline for a reasonable period of time, and then it just disappears. Usually after one loser or a couple of losing trades, then the discipline starts to go. Yep, it's not easy. No one said it is, but it's what I always say people need to work on. Again, I can only pass comment on it right now. That's a whole subject. That's an hour's subject in itself, really. A sarcastic, hey, a statistic, yeah. Um, yeah, well, certainly, I see what you mean there, DTEX. Yes, I think that for a lot of people, once you're accomplished as a trader, I've got accomplished traders who've been trading, well over 10 years, who are full-time traders, and they're good at it. But even one of them, Alan, he'll take himself off for walks. He's not sitting there staring at his screens all day. He'll still take himself out and gets away from his screens as well. So it's finding that balance, yes. But for a lot of people, I think having a job is a good thing. Take the pressure off from trading. Yes. Thanks, Varys. Funnily enough, some of your best trading has been when you've been incredibly busy at work. Yeah, exactly. Yeah, there you go. This is going to sound weird, but after this week, you lost every single day, and I'm the happiest I've been. It pushed me to really improve. I lost 200,000 funding. This is challenge stuff, isn't it? Prop stuff, and it took me to a dark place. Yeah, I understand you've got to start again. But I'm pleased that you're in a good place on that. That's good. Yeah. Uh, when should you add to a trade in terms of risk reward? Ao Yi, can I say to you to go back over my YouTube channel, because I have done a whole YouTube video on that within the last 6 months. So just scroll back over all my videos and you'll find it, because I have already covered that off. I'm looking at the time here because it's now 10 to 8 here in the UK. How long did it take you to be profitable? About 2.5 years, manifest. How important is discrimination? What? Rather than discretionary, I think you mean. Yeah, it's discretion rather than fully mechanical trading. Well, again, I think it comes down to the individual. I prefer to have a trade based on analysis. I have strategies to give me my entries, but I like to trade the broader analysis, like I've talked to you about tonight as well, and that would come under the category of discretion. So, but I know traders who just trade mechanically and they trade really well. So it's down to the personal person, really, individual. Mikhail, well, maybe you should stop doing those challenges then, because I can't stand them. I'm not a fan of those firms. I think it's all a con, to be honest. It's a legal con. Sorry, but I'm again. I'll, I'll have to save that subject for another time. But it's not a con. It's that's. But yeah, I'm not a fan of them. They're geared to make the firm's money, not you. Yes, a very small percentage of people get payouts, but usually over time, because of the way that they work all the rules, they know you're going to end up, most people are going to end up over time hitting their stop losses and or their account stops, and they're having to start again. So that's the way they're geared. So it's just a business for them. How much did you begin trading with at the start of your trading from home journey? If you're okay sharing that, 40,000 back in, yeah, 28 years ago. Um, do you do you people should do you people should subs? Okay, I'm not understanding the language, but signals that just give entry and exit targets. Well, it's fine if they're. I've got signals that do that, and again, that comes down to the individual trader, Abdul. So if you've got someone who's very busy, they haven't got the time to invest in learning all the elements of designing their own strategies and their own analysis and all of that, and they just want, you know, signals, then that would be appropriate for them. Now, you've got other people who are saying, no, 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 I want to learn to trade for myself and do it all myself. Well, therefore, signals wouldn't be appropriate for that person. So, yeah. Yes, I've been talking about the fundamentals earlier this evening, Pranav. So, yes, I do. I'm mostly a technical trader, but I'm very much looking at the fundamental backdrops to what's going on as well. Yes. Oh, good, Mikhail. Good. Excellent. 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 Yeah. Yeah, that's fine, Abdul. Yeah. Right. Now, I hope you don't mind, but it's nearly coming up towards 8 o'clock here in the UK. As always, it's great answering questions at the beginning of tonight. Again, I gave some of my analysis, but if you missed it earlier, but I think we're getting closer to me saying we're going to have to go. We'll do this again. I've given you some of my analysis overall. Let's come back in another 4 to 6 weeks, perhaps, and we'll do it again and review what's gone on. Because otherwise, I'll sit here for another 3 hours. As great as it is, I want to have a break. Absolutely, Ian. Yes, 100%. It's still the staple of what I do, Ian. Yeah. 2025, good year, good idea. Finding trading job, find trading job. No, not really. There's not. Trading firm, or sorry, should I say, banks don't really have traders these days like they once did. So, nope, trade for yourself. Yeah, it's just not there anymore. That's long since changed. Shortest time frame based on your experience. What is the shortest time frame? Well, you can go right away down to a tick chart, Abdul. But what would I recommend? A 5 minute chart, the absolute shortest. That's what I would recommend. But yeah. Why did I switch from options? Because they're costly and expensive, Chiller. So that was why. Uh, no, no, there you go. Oh, sorry, I've just seen your other one there. So What ways to find big capital when become good trader if prop firms? Yeah, um, well, prop firms, it isn't real capital, as you know. It's just demo accounts. It's not real money. And if you pass through their challenges and you get up to several 100,000, and then if you made quite a bit of money, plenty of people who do get to that stage get asked to leave. So what's the point? So no, build your own capital over time. Get a job, or if you've got work and you can add to your capital, so you're growing it over time with your trading and putting extra capital in it from your work as well. That's the way to really compound your capital over time. So yeah, I would forget trying to trade big capital personally. You're never going to get into a hedge fund. I know I'm dashing your hopes, but it's just not going to happen. Hedge funds take traders or people that have worked for the big investment banks. So, and unless I'm having to make the assumption that you've already long since finished university and all of that, so that ship has sailed. So it won't happen. So. Um, Manifest, put whatever is affordable for you to put into a trading account. I don't know the answer to that. I don't know what your outgoings are or anything. What is affordable to you to put in every month? So that's down to you on that. Right. I'm going to have to wish you all and bid you all a good night, wherever you are in the world. And we'll be back in I don't know. Hopefully, if I remember, in about 4 to 6 weeks. So yeah, thank you for all these questions. But yeah, I'm not a fan, Pranav. I'm not a fan of those things. They're there for those companies. They sell the dream. People get sucked into the dream, and you end up in a trap. Forget it. Trade your own money. It's the only way. You see. Sorry, now there's another question. When price approaches resistance at support level, what kind of behavior would you want to see? Do you confident the price will break out or bounce? Oh, okay. Um, I would look for patterns, price patterns in those zones, Endeavor. So that's what I do. I'm looking for specific price patterns into those zones. Good stuff. Right. You make live stream every day? No, I don't, Mikhail. Sorry. It'll be in about 6 weeks' time. Now I have my own trading room and trading community. You're welcome to join it, but that's my private community. Just go to Charlie Burton Trading and you can find it.com. But no, just doing a broadcast like this is just once every so often that I do that. I'm sorry, there's so many questions, more questions coming through, so I'm not going to answer any more questions. Sorry, Chilla. Right. Let's press end to the stream. Thanks for your time, and I'll see you soon.